Okay, I think that's a good start. All right, everyone. Another good Thursday. Z.
Thursday's always good. Episode number 4.
Okay.
Hopefully 10% improvement
All
versus
right.
episode 3.
Yeah, every week.
Every week, 10%
that'll get us to
improvement.
100x. So, hello, everyone. Really great to be back. Want to set the topic, but at the end of the day, it's more a conversation with Z and Timeless here. This week, we'll really get deeper on the social finance part, that not only that we have research, but our long-term vision about how DeFi and how blockchain and how many decades of our experience put together. But the big topic today is the Superchain, the layer 3 that Z want to get into. And for myself, I'll keep diving into the synthetics and the futures and the derivatives.
Yeah.
Z, you want to set the tone?
Yeah. So in terms of I think I think we always talk about composability, interoperability, primitives, infrastructure, protocols, right? But I think the reality is this, right? All these things are combined in the sense that infrastructure exists in service of some of the primitives that can actually build on top of it. So that, whether you're institutional investors or retail investors, right, can participate, right? So I think like I said, this is episode number 4. A lot of the conversation will get more and more kind of interesting, more dynamic, and it's just that they're sort of intermingling a little bit. So for me, I think today is really more about the concept like Superchain, right? Hopefully Superchain is kind of a allegory for a super cycle, because I think we are, depending how you look at the market, the time horizon you look at, certainly, we have been, the past 12 months has been relatively generous in terms of market price action, right? And then with that, do we need a new set of primitives, which you talked about last week, right? Was, some of the kind of synthetic instruments, right? How does that actually really encourage additional participation, right? And the Superchain, in my opinion, is really, it does lower the barrier, the thresholds for more participants, right? And so for me, from my perspective, basically, obviously, been super diving deeper in terms like within the Superchain context, that is there a kind of a existing room, a vacuum for a layer 3 to exist, right? And I'm obviously very excited, very, very much a biased opinion to take, in the sense that I think when we looked at DeFi summer, which you guys were, Harmony have kind of really actively participated back in 2021, 2022, a lot of the subtle kind of a behind the scene infrastructure development, what made DeFi summer possible in that cycle was actually the advent of layer 2. Probably the most successful narrative in that cycle was actually the rise of Polygon, which I know, back in the 2018, 2019 circa, you were actually pretty deep with the Polygon team, the Matic team, right? With layer 1, right? So hopefully this conversation is really kind of just hopefully for our audience who are listening, for both community who listens, that these ideas are going to start kind of gel together. And hopefully in episode 5, 6, 7, 8 and onward, we're going to try to craft a kind of more stronger narrative to say how these things are related.
Right.
So I'll put it back to you, right? In terms like finance, right? I think, one of your co-founders, RJ's main narrative is that, the number one killer use case for a fast protocol is DeFi, right? And I think DeFi is a larger narrative, but I think you've been kind of going deeper in terms of like the narrative perpetuals. Can you just kind of talk about like, this week you shared like some interesting, fixed yield, protocols. Can you talk about Pendle? Just kind of give everyone a high level overview, please?
Really, this week, we will keep really experimenting with different formats, and this time with video on Twitter space to really understand what will be the best way. It's going to be content driven. It's going to be two of us driving what are the weekly on our thoughts and what we're researching. But at the end of it, we'll also really ask the community to jump on with us to do a few questions, whether about Harmony, about roadmap, but also the interest on Timeless, because at the end of the day, it's the market that's interesting.
Right.
And for me, I really set the tone and keep asking what will be the social finance that both of us will share in this narrative. And for me, is to keep repealing you about what are the DeFi that is going to be driving. And I will say I also do a lot of background research about the macroeconomics and geopolitical stuff that I'll share in a few weeks. But this week in particular, I really find that the two related topics that even for me, I wanted to focus on launching a perpetual first, options protocol first, that it will be really related when we talk about both the SynFutures, but also the Pendle.
Yeah.
So I'll give a little bit context, and I'll jump back to some of the questions about how both Superchain and Timeless way of approaching this problem. So I'll say synthetic futures and Pendle really get onto my radar this week because of one reason. By the time you talk about DeFi, now you know what are people talking about when you talk about points.
Right.
When you talk about DeFi in particular, then you will know that everyone is trading the futures or trading the pre-launch tokens even. And at the end of the day, I was not looking at the stable coins of even restaking, but then again, it's related. Right? All the new chain, Superchain, Layer-3, they will have tokens, they will have points, they will have yields. And how some of the protocol, and again, whether infrastructure at the product level or like at the wallet level, they have to deal with it, how the user are getting with the traction. And I think that's the hook for both of us today.
Yeah, so that's really good. Also, just kind of really fortify the assertion you're making, right? In terms of like some of these newer DeFi primitives, I think the reason it's not just like financial engineering for financial engineering's sake. For people who are listening, right? Sometimes we get hundreds of different listeners, right? Everyone has a very different risk exposure and risk tolerance. Last week we talked about people in your 90s. Hopefully, you're not being celebrity meme coins. You're not buying like DJT tokens, or you're not buying the Andrew Tate token, right? Nothing against those celebrity tokens, but in your 80s and 90s, your risk tolerance is basically relatively conservative. In your 20s and your 30s, your risk tolerance may be a little bit different. And I think this is kind of really the idea of like, perpetuals, right? Like some of the, we talked about Penoptics 3 weeks ago. This week we're talking about Pendle. They actually have a very different risk exposure, right? One of my, I briefly look at your kind of show notes. You talked about like, it is actually for Pendle is actually a fixed yield, right? Now, for people in there used to like, 10,000x return, this may not be something that you care about, right? Because, hey, I really love Dogecoin type of a kind of tokens, right? But fixed yield does actually offer a certain different type of incentives for certain type of investors, right? So I want to put it back to you, like, how do you kind of think about like just on a spectrum risk tolerance?
Yeah, honestly, when we got so burned by Luna and Anchor, that when we did the research almost 3 years ago, I know it's going to be a popular topic. Anyone would experiment with algorithmic stablecoins, fixed yield protocol in particular. But the world really, they don't forget, they actually just advance about now much more things are on chain, much more things are at even larger scale. That when we studied Anchor, we knew for a fact that it is a meaningful and sustainable and also robust mechanism. The protocol failed, our ecosystem affected by it, and I was really taken back by like what people actually would do both on stablecoin and fixed yield protocol. As a matter of fact, this week I thought I can finally focus on just one thing, right? Which is perpetual or perpetual options. And then like OPYN, Open Protocol, we've been really researching about it. I actually just happened to doing one deep dive onto another blog post that I don't even get to talk about much. And then it actually just got announced a few days ago that there will be a new generation of that protocol coming out, which is super exciting, right? There are a lot of things that people do in the background, people still giving talk, people still doing development, that finally the market and the appetite and the development finally is robust enough. In particular, Open will be becoming a market rather than just, as we know, power perpetuals we talked about the last few weeks. Same thing, Ethereum was a great launch. They already have a few billion TVL, and the same thing with Pendle, right? The way that they are able to separate out points, which we used to talk about 3 years ago again, about soul-bound, non-transferable tokens, so that early on when you're marketing is actually engaging the community, they actually separate out. That finally I actually need to look at interest rate swap again. So instead of swapping interest rate, they're swapping the points.
So I think there's like two main points I have to talk about, right? Number one, like some of these newer DeFi primitives, for example, Athena is really good. So Arthur Hayes actually wrote about it, I think 3.5 years ago. For people who are with a financial background, meaning Lee, the idea of like something like Athena is actually fairly new concept, fairly old in TradFi. It's cash carry, right? It's like you already studied that, like finance. I think it was like finance 202, right? So it's fairly old concept in TradFi, But when you take something like that and apply it in a permissionless protocol standard, right, that does create a whole new opportunity, right? And by the way, like Athena, something like Athena or Pendle, right? It is relatively stable, right? I mean, I know Arthur Hayes doesn't want to say Athena is a stable coin, right? It's a synthetic dollar. I think that's the terminology he likes to use, right? And the reason why these are, relatively speaking, lower risk exposure, and why is this actually attractive is because they're fairly stable. It allows for more, I'm going to quote this, speculative DeFi primitives to build on top of it. Translation for people who are listening, right? For example, the macroeconomic, and especially in the US for the past more than like 3 decades, has been predicated on what is the federal interest rate. Relatively stable. It doesn't change all that much, right? It's like, okay, the Fed is actually lending out. You mean in the US government set the kind of the base interest rate? Let's say it's at 2% or 5%.
Yeah.
Not the most exciting things in the world, right? No investors, whether retail or institutional, get excited about that, right? There's actually not a lot of profit margin to be made. There's only 2 or 3%. But you and I, we both know, right? Anyone who actually goes to a grocery store or have a credit card bill or pays mortgage or car payments, whatever the case may be, right? Literally millions upon millions of decisions are made every day based on something that's so boring, something that's so stable. So hopefully that translates to people who are listening. Is like, why is something so boring and so important? Because it allows for, okay, well, if the Fed's lending out 2%, then, whether it being your private equity, right, institutional banks, they make their calculation. What is kind of the speculation they can make based on, like, okay, should I be lending out to certain, construction companies? Construction companies, okay, well, I can project my return on this new building is this, right? So there's actually a propagating forward effect, right? That's why, I think it is interesting. But in terms of like tying back to the conversation about Pendle, right? Can you just kind of talk about just like some of the kind of the research you've done? Like, why are they relatively successful in the past 6+ months? Because I know you did a lot of research on this.
Right. So whether SynFutures or Pendle, and if I get a chance to understand, open the market, they haven't announced much detail, but I've been researching the code base and learning about their teams since the last 3 years of work. It's the same story, right? You asked me, right, would there be a different risk appetite, and will it be helpful to certain people, whether retirees or someone just want to have a fixed yield? The answer is yes, right? That it won't be 20%, at least not for like many, many years, but it will really fit for a certain audience. Come back to Pendle. The biggest thing is there's so many big points and token launch and airdrop and our favorite topic, launchpad, and some of the meme coins too, right? That literally is really about the early engagement, that the points that the wallet will be above already doing all the early product usage and engagement to be gaining the early points like farming. But the fact that you don't need to wait for it forever, that they can trade those points already. And Pendle was able to separate what they call the principal token, meaning you put down the dollars first, let's say USDT and USDC, if not ETH on it. But then the points are unknown. Then that become the futures, right? In some way, whether derivatives and futures are the very, very similar construct, and they're able to unify under some concept called power perpetual. But the interesting element in this is the time element. Even though it's 1 year full out, they were able to really, really talk about 30% annual yield, because like people already know what that can project back, because there were many successful token launch the last 6 and 12 months, that they are really be able to project it 6 months out, 30% APY. And I think it's relevant to us, right? Our ecosystem would not have many tokens launched this this year, and we are not doing cross-chain yield farming at all. But then understanding what are the primitives for both points and memes, as we know, is the story of Launchpad.
Yeah. So, in kind of really again honing in on this idea of like, how does like Pendle fixed rate yield like 2 points, creating a synthetic instrument on top points. But again, for people who are listening, points is kind of I don't think it's a new concept. It's been around for like 3 or 4 years. It's got more popular in the past 1.5 to 2 years, because there has like, we're no longer in the ICO boom market, right? And it is harder and harder to get listed on some of the more notable, centralized exchanges, right? And DEX is actually filled with almost like over inundated with too many tokens, right? So for some of the more credible projects, in order to kind of get the attention early and get the community engaged, whether being most recently Linea from Consensus or Tyco, and maybe Base will do their point. Maybe, I don't know, who knows, right? But the idea is basically points allows for earlier, higher velocity experimentation, right? And then people who are participating, kind of accruing points, they have relatively high risk tolerance, right? And for context, we participate in multiple of these type of campaigns with some of the layer 2s. You're literally looking at someone who's actually one of the most memorable points harvesting farmer that we talked to was that he's a sailor. So he literally goes from port to port, right? And then, whenever his boat docks, he's a sailor, right? He works on one of those like giant container ships, right? Yep. He's like, hey, I have about 20 hours to burn. This is a young man in his, I think he's probably in his early 20s, right? He's basically, hey, you know what? Rather than spending money, I can just sit on a boat on a dock and actually farm points, right? So he has relatively high tolerance for risk, plenty of time to burn, right? Because when you're out and about, you're literally doing nothing, right? But what he did say is this, right? He does not have the patience to wait for another year for these points to be converted into some kind of tokens. And then there's a trickle down effect or trickle up effect, was like, once the tokens get listed, right, there's an unlock. Is there sufficient, is a low flow rate? Is there enough liquidity, right? So he said, I don't have 12, 18 months, 24 months, right? So I need to be able to basically exchange that. I think that's why synthetic on top of that is really interesting.
For sure.
Right? And again, somewhat orthogonal analogy to this, but risk exposure and tolerance is so important. For example, I know there are plenty of investors, I'm talking about like Wall Street investors, who made a killing buying FTX
of the bankruptcy,
right?
Literally,
fraction of a penny on a dollar, right? And it's actually, I think some of the people who made the calculation is roughly around close to 200x return, right? Because it turns out FTX actually, say what you will about Sam Bankman-Fried,
if not the Solana shares,
right? He made a huge bets on some of the AI startups, right? Solana, right? So the point being is that basically everyone has different risk tolerance, and your time horizon is very different.
The hedge and risk, but you said that the right word, time. I was about to say time travel. You can really predict the future as a synthetic, and also like really give out the wallet address earlier to know your repetition. In some way, your wallet now become OG, but you also can time travel for your tokens to get the value right now. Right. So I think it's really important for a product person like you and for a political person like us to understand the market in this way.
So I'm gonna tickle your the PhD side of your brain a little bit. So we talked about speculation. I think it was episode number 2. We talked about like how you actually have a negative deleterious effect, right? Because effectively, speculation is just another fancy way of saying for gambling, right? And I know Chris Dixon, is dead against it. I mean, to the fact that the main partner from Andreessen Horowitz wrote a book about how he doesn't like crypto casino. He loves, crypto the computer, right? I think I understand why he wrote it that way, but in reality, I think I'm going to try to pick your brain a little bit, right? Speculation is part of the price action for the market price discovery, right? And price discovery is not immoral or moral. It's amoral, right? It's random walk. So, and I think part of this is where I'm trying to pick your brain a little bit is basically, how does these DeFi protocols, it is a random walk. No one knows. And that's the beauty. No one can set the price.
That's not quite true.
Well, so we'd love to hear what's your take on it, right?
So to say that it's a random walk, to say that let's do simulation, to say that it doesn't add value if you just do zero sum, is something as I said even last week, I thought a lot about. To say it's complete random walk, we just need to simulate different outcomes and use past market data to do prediction is not the right model to think about how both the price as well as product evolve. To me, it's really understanding primitives. Right? Everyone understands points. I mean, loyalty points, airline points, right? And everyone actually say, let's go to retail. Actually, let's enable the Apple Pay level. It's actually, again, it was something that is correct, but not now. Right. The now is there's so many as you know, how to do marketing, how to do early community engagement. Those are the reputation and the non-transferable soul bound relationship, as you said, that need to be curated. Right. To say that you couldn't predict, or it's just a random walk, it's just another anonymous people coming and let's see what happened to some of these tokens and points and marketing campaigns. It's actually you would not say marketing campaign is just a random luck. Right. You do so many things to control and learn from the market that to call it simulation and do it just experiment, I think it's a role model.
Okay. So maybe that's a point that we'll maybe in future conversation we'll talk about. I kind of see it as it is a large scale simulation, but in the sense that the thing I love about crypto market is that basically for the most part, I know people accuse crypto being somewhat manipulated by whales and stuff, but I think just because of the permissionless nature of participation, the large-scale simulation that's permissionless does actually provide a better price discovery mechanism, right? That's what I mean by random walk, in the sense that it's not just a pointless random about, right? There is a objective function, meaning you're trying to say, hey, I have 100,000 points, right? Right now, even the people who are generating those points, meaning the project themselves, the honest truth is that no one know what the price is and should be. Right, because you can look at on the cap table or on the kind of tokenomics. Okay, we have certain fixed token, we have the emission rate, we know what our equity cap table looks like, right? But you as a founder, and this is again, I'm gonna maybe try to relate back to the version of you back in 2018, prior to the token generating event. The honest truth is that you actually don't have a concrete idea what Harmony token price is.
Well, the fact that I don't know about what the future holds is not because it's a random.
Right.
It's because I don't have information, I don't have experience, I didn't know much of the broader market. Every time when we talk about whether simulation or prediction of the price, is because you don't have sufficient data.
Yeah.
To say that it's random or we don't know is true if you take it that way, but I'm saying there are much more principle and primitives that can be studied. Right? That's why I'm actually studying about currency and the fiat and the US banking system. I'll talk about in a few weeks, right? That by the time you know about that geopolitical as well, what U.S. government is doing, what Balaji and Ray Dalio in particular, I actually just published that blog today, will give us far more that between the short-term random next point randomness that, as you said, right, the interest rate will set the tone for the whole world.
Right.
And same thing, many of the physicists coming into the space will do simulation. Because you can't solve it exactly as an equation. There's no symbolic solution for that. I actually don't think it's the right approach. Security, price, setting parameters is never about just simulating and optimizing it. It's understanding what are the principles that something may break, something would always go to a certain point, whether the bottleneck is a certain way. That just like 2 weeks ago, I disagree. It's about human versus AI. I actually disagree. It's about whales versus retail or big versus small. As you know, small can put together, become a big whales, and whales can just Sybil attack you as 1,000, if not 1,000,000 wallet addresses.
Yeah, so maybe I'll kind of refine my kind of own assertion, which is actually something that we obviously been thinking about in terms of this concept of social capital, right? Meaning, I do think there are a lot of unknown variables out there, right? And just because the market is so dynamic, when you have literally almost close to probably about 600 million global participants now, right? I think the Q1 stats, and again, just kind of throwing some random factoids, I think Coinbase and Statista actually said there are roughly around 500 million active crypto participants now.
Wallet addresses or people?
People.
But okay, you go first.
But so, and I think this actually kind of gets to kind of trying to piece together some of these ideas, right? It is kind of interesting. Crypto has been around for 15 years and everything is immutable, is recorded. But thus far, we actually have a very difficult time telling on the opposite side, that 0x address, is that a bot? Is that Alice having yet another wallet address? So it actually really is hard to discern.
But it was a trick question. I don't care whether it's a human or a bot, a wallet address, or a person.
Mm-hmm.
So for Web 2, it matters a lot, right? So everyone need to have a password, email address, maybe even a real name for Facebook compared to like just anonymous nicknames, street names. I actually think hopefully maybe we'll have another time to think through all the questions even to ask, right? I'm pretty certain that people should not care about human versus AI. Maybe next year, maybe in 10 years when AGI comes, right? Same thing, right? Do you really, really want to impact 10 millions in, let's say, of a third world country compared to 100 people that actually will bring your protocol platform or change in the world together? I actually don't know how to answer that.
Yeah. So, and I think this is kind of actually more interesting, right? And again, going back to the concept of social capital protocol, what we're working on is basically, I'm actually strongly opinion in the sense that I think the most atomic unit of measurement, whether it be Web 2 or Web 3, the most discrete unit of measurement is actually the concept of an individual, right? We talk about like self-sovereign, whatever is self-sovereign identity or self-sovereign agency of like tokens or kind of crypto holdings, right? I think it is important because otherwise the most discrete unit as an individual means also you're enabling a larger distribution, a lesser concentration power. The reason why people have issue was like, let's say, back in the Bitcoin mining days, like literally just like 2 or 3. There was a famous setting, right? It was like Vitalik was on stage. It was like 5 Bitcoin miners. Everyone understand that, right? Why is that an issue? Well, it's an issue because of concentration power. But when you go to the most discrete unit of measurement, individual, that means, okay, well, a crypto well, you may have hundreds of millions of token holding, right? And you should not have undue influence. And if you want to have undue influence, one of your favorite equations, you should use quadratic voting, right? Quadratic voting is basically saying, hey, we do want people to basically put their money where their mouth is, but it should not be in lieu or replacement of an individual, right? And then tying back this concept together, WorldCoin. I mean, Sam Altman has both hands in 2 cookie jars, right?
Not a good project.
Right? Not a good project, but conceptually it's a good idea in the sense that you do want to make sure that when you talk about agency, what is the baseline? What is the discrete unit, right? And I think social capital protocol in the context of points and bringing it back to the topic together is basically saying this, right? Yes, point farming, token farming, yield farming, these are a real thing, right? Do you want to have 2 developers who wrote amazing script that can generate literally hundreds, if not thousands, of wallet addresses and hoarding all the points, right? And because once the points get hoarded, there's actually that information asymmetry now. You, the project developer, you're the protocol, you almost have zero, you have opacity in terms of like, what is really the relative traction to have within the market? Again, why did Layer-0 spend so, by the way, shout out to one of our friends, Layer-0 token generating event. Congratulations. They spent actually about a month and a half, 2 months, not talking about the token, the value, the protocol, how to combat the Sybil attack. And that's actually one of the famous Bitcoin white paper was actually that. Roughly around, right? 1 CPU, 1 vote, right? The whole Byzantine fault tolerant Sybil attack. The whole blockchain, talking about the most baseline primitive, is this idea that basically you do want to making sure that there should be a way for you to stratify. Again, I'm making a very kind of a amoral judgment. I'm saying like it's not bad or good, right? It's not for us to say, well, talented developers should not have the ability to generate bots. I have no moral qualm about that. I don't have any personal or logical animosity. What I'm saying is like there should be a way to discern that, right?
I actually have a theory about that, but it will bring us so far into the DAO and what's not. Let's see whether I can even articulate, because we talk about it so many times about like the importance of DAO, but also diverse opinion, in particular about culturatic society. So I want to at least bring back to the like timeless story this week, and out of love, I want to say out how I see timeless, so they can expand on it, right? Otherwise, I'm just going to nod along. I'm an active participant, not just a listener of the timeless story. So I know that's the hardest thing to hear, not criticism, but even your best admirer, how they will put it for you, right? So let me read out. Timeless is an Ethereum Layer-3 chain using Base protocol and Optimism OP Superchain infrastructure, but also in particular with Celestia data availability. The social infrastructure for the value exchange and interoperability. No more bridging and toggling between the chains to DeFi or SocialFi. No more creating countless logins. Timeless user can just carry their identity data, the relationship across different social apps. It's going to support native account abstraction, Passkey, new cryptography curves, in particular, even ZK technology for data community like Validium.
Right. I'm going to give myself and my best friend a round of applause. And I'm giggling for people who are watching us live. Number one, when you get an idea that you're kind of like is embedded in your head, sometimes you could be in your own echo chamber, like meaning you have an inability to actually see the forest in front of the tree, right? The reason I'm giggling a little bit is because when you sent me this yesterday, I literally went back to my own presentation deck for my ECC Tech Talk to modify it. I was like, oh, this is actually a much more clear and concise way of explaining it. Because I think you and I were both guilty of like being kind of like too philosophical and too abstract at time, right? So it's always good to have a friend who's actually able to say, hey, we've been talking about this social capital protocol, timeless, for several years now, right? What you say, this is how I'm hearing. And what you projected back was actually really, really clear, concise, and very succinct, right? Maybe not ZK succinct, but it is succinct, right? And then part of it is also, I think, the kind of bring it back to, this kind of like, I think there are 4 or 5 key technical terms you threw out. And for me, we've been talking about this idea of layering on top of layer 2s. We're building a layer 3 within our project. And it's because the idea was actually relatively, it is relatively new, right? In the context, like the entire blockchain kind of a dynamic. I think that if you just do a Google search, and I did spend the past 6 months, literally every single article that you can read on the internet about layer 3, I probably read it once or twice. And the top 5 articles, I probably have already literally like rewrote half of their article, right? Vitalik actually, one of the most well-written is the one by Vitalik back in 2022. And also Starknet back in 2021 called Fractal Layering, right? Because by the way, Starknet back in 2021 was already talking about layer 4. So this is, we're going to
fractal all the way.
Right, fractal all the way, exactly, right? What's exciting about this is that the idea was actually relatively interesting back in 2022, but was not possible.
Exactly.
Was not possible,
It's
right?
the timing of things.
It's timing, right? So, for example, back in 2021, 2022, all the layer 1s are still duking it out, including Harmony. You guys were actually an upper echelon of performance, right? It's okay. Can we go from POW to be the first one to do POS?
Exactly.
Again, POS was though kind of a questionable thing back in 2021, right?
People are still debating.
People are still debating about it, right? So that was not possible if the base layer is still debating what's the right consensus mechanism. And then on top of that, how do you scale performance? I think, there's like horizontal scaling versus vertical scaling, right? And I know Harmony was the first one to say, hey, I think you guys were probably one of the first one to actually go out of the gate with this concept of sharding, right? Again, without sharding, without kind of these kind of a horizontal scaling, layer 3 does not even make sense, right? And on top of that, for example, this idea of rollups versus ZK snark, right? Rollup is actually somewhat highly debated back in 2020 and 2021. Everyone said it was not secure, right? It defeats the whole purpose of layer 1.
7 days are pretty long,
right? 7 days are pretty long, right? About like people are complaining about 10-minute finality. You're talking about, okay, how do we go from 10 minutes to 7 days, right? So again, a lot of things that we talk about, I think some of the most interesting ideas are often wrong. Some of the most interesting ideas really a byproduct of like, are the market ready to hear it? And also are all the right necessary ingredients, right? And I think that's why this idea was so technical. Before the conversation, was, hey, you made a comment, oh, Z, I noticed you're going more and more deeper in the technical side, right? I was like, well, it's kind of interesting, right? And because you kind of give you a chance to kind of retroactively do a kind of a technical regression analysis. Okay, the things that were predicted back in 2020, 2021, 2022, are they so valid? And again, a side note, I think Vitalik, I think you and I, we debate about certainly I think he's amazing as a leader for this kind of a decentralized movement. But if you look back, much of his writings are actually what I consider evergreen. Because you and I, we both know, it's very hard to write a technical essay that's actually relevant at that moment, a year from now, 2 years from now, 3 years from now, 4 years from now. And looking back in 2024, reading the essay he wrote on Layer 3, the titles are basically, does Layer 3 make sense, right? He asked open up a posed question, right? And he did talk about Validium. Validium was actually talked about back in 2021, 2022.
Well, I have many Medium blog posts on ZK and Validium.
Right.
So there will be quite many things that even about the timeless new pitch and heading to ECC Belgium that I would like to hear about. But let me jump on to one point, just so that I have some way to ask you, right? It's the Superchain narrative. I specifically picked Superchain also because I want harmony to think about, right? What is the narrative? What is the story? And there are, right? Not only about all the technical things that I want to go very deep, but Superchain is really capturing the market narrative, right? Not only Optimism is not about the debate between fraud proofs versus ZK proof. It's the idea that can all the chain share infrastructure, share data availability. And for Harmony, it will be the story is what is the difference between vertical and horizontal scaling if we cannot be a bigger part of bigger narrative? Can Shard1 be Superchain? Is what I've been asking the team, myself, but also you offline. So my question is as follows. There's no doubt that we are the pioneer in sharding, but there's also no doubt the world also need bridges, need infrastructure, need gateways, need to be really interoperable, not just for like bridging over, but like all the social profiles that you're building, all the points that is possible, DeFi, that you can connect them together. So I have one idea about why Harmony Shard1 will be part of Superchain. What do we need Superchain for? Why do we need Superchain? But can you guess? So that I can see whether I'm onto the right thing.
And I think this is again where the gigabrain of Steven. I think sometimes like when you listen,
I've always posed that as a question.
It's always a good question. I think a good question is always like it's like 50% of answers actually in a good question, right? So, but I think the reason I'm saying that I think you tend to jump 5 steps ahead in terms of the audience. I think first of all, can we just explain what the concept is? What is a Superchain? And I know Lee tend to listen to this. We're trying to do a better job of actually explaining some of our ideas in our head, connect the dots a little bit. So do you kind of just from your perspective, maybe I'll append to some of your definitions.
Of course.
What is a Superchain?
Well, let's do two things, right? Why Superchain, but also in the context, but also for the audience here, why Timeless and Harmony, and in Harmony in particular, why Shard1 in particular, right? So I gave the context of Timeless quite a bit last week to catch up, the technical things you guys have done, but also looking forward, the rest of the year, you guys will be building protocol, building out the entire infrastructure for the chain. So for Harmony, the same thing, right? Even though we have been building myself 6 years and the chain alive for 4 years, Shard1 is still a very meaningful.
No, 100%
for us to think about like it's not just about like launching a few application, it's not just getting a few more users in TVL, but what is the bigger narrative that the next 5 years will still be correct? Right. And for Shard1, there's no doubt that we have the technology and the platform and the tool, but how would they connect back to like everyone is doing layer 2? Everyone will come up with like the next application that will still be like not just about like connected, like but connected in what way?
So again, I think you dodged the question a little bit. So maybe I'll try to answer this way, right? So generally speaking, as part of my presentation, I talk about like in computer science, everything is basically data and compute or time and space trade-off, right? So generally speaking, I think at the layer 1 level, I think there is already kind of this idea of like shared resource, meaning EVM. Harmony is a EVM compatible, right? Meaning in the world of like kind of like all different layer 1s, like by and large, there is our kind of this invisible layer, kind of Superchain, EVM compatible, right? Meaning if you're a wallet builder, you're a DEX builder or a DApp builder, it's relatively easy to kind of go from, let's say, Ethereum to Harmony to, let's say, Polygon. Well, Polygon's the layer 2, But the idea is basically layer 1, as long as you're EVM compatible,
Mhm.
is relatively easy to toggle back and forth, right? At the layer 2 level, this idea of Superchain is actually even more interesting because the virtual machine operates at a layer 1 level,
Mhm.
right? But Superchain, especially from an Optimism and Arbitrum perspective, is basically saying, hey, you know what? The actual interaction, the settlement on layer 1 is always going to be expensive. By definition, it has to, right?
Mhm.
But the sheer liquidity, the sheer asset, that could actually be conducted directly on top of layer 2. So I think OP stack is basically saying we're actually going to design this whole infrastructure to support that. You can actually have multiple layer 2 built on the OP stack. Most notable, the OP mainnet
Mhm.
and also base,
Mhm.
right? These are all part of the Superchain ecosystem.
Yeah,
Celos, right?
I feel that you mentioned.
And then also just kind of for people who are listening, right? This idea of Superchain is interesting is because, for example, the OP stack actually has a very interesting technology licensing agreement.
Mhm.
For example, you're not, because it is open source, you can fork it. You can do whatever you want with it, but that does not, it's not an open invitation to be part of the Superchain. For example, Blast is a layer 2 built on
Mhm.
top of the OP stack.
Yeah.
They decided basically just fork it.
Yeah.
And then they don't want to pay for the licensing fee, the MIT licensing fee. So they're technically not part of the OP Superchain stack.
Yeah.
Right. Again, no moral judgment there. I mean, I think, Blast is obviously doing really well, but Base is part of the Superchain. I think
they committed 7%.
Yeah. So because that goes back to the OP foundation, right? And then basically that ensured all the development, ensure all the kind of the assets and the data will be shared across all the layer 2s, right? So I think what I'm describing basically Superchain is that there's like the shared compute, right? There's a shared data, right? And on top of it, in between, there's obviously a lot of new or interesting concepts like data availability, right? Even data availability, now you actually have this kind of like an aggregation of DA, the aggregate. For example, everyone's heard about EigenLayer, everyone's heard about Celestia, but there are actually third-party service provider called AnyTrust that would aggregate multiple DAs, right? So I think, when we talk about interoperability, I think, again, it's a very loaded term now, right? Are we talking about interoperability at a compute consensus layer? Or are we talking about interoperability in terms of like token, wrap token, bridging across, right? Or what about all the other data, right? That's actually, can that be shared across, right? And this actually ladders up to basically saying, we want to be part of the Superchain, right? And I have been advocating for Harmony to say, hey, let's actually find a way to use SHA-1, not just necessarily mimicking what SHA-0 is already doing, because it kind of defeats the whole purpose, right? I mean, to be quite frank, a lot of the overdevelopment in the past 5+ years on layer 1 level, there's actually overbuild of the infrastructure. Meaning not all the blocks are being used properly.
For sure.
So hopefully SHA-1 could be actually purposed for something, maybe a complete different set of use cases, right? Maybe SHA-1 could be actually designed in a way that actually seamlessly interoperate with the OP stack.
That's the whole point. I think that's exactly is what I'm thinking. So
Right.
even though we take a few minutes to get to the point, I think the story for Timeless is very clear. At the application layer, now you actually go down to capture what will be the tokens as well as protocol like value, right? For Harmony, we do the opposite. We build the infrastructure, we understand technical. How do we go up to be interoperable, not just with EVM level, not just with like we are also being part of the blockchain like movement, but to like what are the things that is really difficult for Harmony to be part of. So before it was Cosmo, Bitcoin, Ethereum, and Solana.
Polkadot, you forgot Polkadot.
Polkadot, like really, really
Yeah.
strange, right? There are
Yeah.
many other ecosystems that like really self-isolated, even though like even Cardano, many people talk about bridging and interoperable. They are just within the ecosystem. It turned out to be not ZK yet.
Yeah.
But OP picking an infrastructure that everyone can be part of in terms of like gateway and ecosystem, just by the simple fact that USDC as well as Coinbase will be connected to this OP superchain. That imagine, not even imagine, I'm really counting on superchain to have like day one that any USDC, any Coinbase wallet account and account abstraction that you guys are doing to be part of SHA-1 narrative, right? And that alone, it's not technical, it's not something that our chain is better than your chain, but it has to be true for the users.
Yeah, and I think this is kind of where I think kind of continue to construct this idea further up, right? So we're talking about like Superchain. Currently, the narrative is actually at the layer 2 level. even though this idea of Superchain was actually largely discussed by Polkadot, Kevin Wood, and also the Cosmo team from Ethan Bachman, right? And actually, just anecdotal kind of a side note, I think about 4 months ago, I asked Stephen you this question, like, who made a decision back in 2018 for Harmony to be EVM compatible? Was it a heated debate? And I think your answer actually surprised me. I think you kind of just vaguely brushed it off. I don't know. You didn't say exactly. You didn't quantify, but it seems like that was a very quick decision you guys made.
Yeah, our CTO, co-founder, like Rongjian, RJ, really make many of the critical decisions like that.
Yeah.
Even we were debating UTXO. We were learning, honestly, not debating. Right? We were just understanding it, which cryptography curves to use, how are the EVM and what version. These are the things that RJ have been really learning a lot, even before Harmony. And we quickly made the right decision. Proof of stake, the same thing. When after we made the decision, we were still learning what is proof of stake at that time. I would say 90% of the industry is still debating and still launching, still forking. Proof of work, right? And right now it's not even a point to be discussed anymore.
So I think it's, and I think the reason I'm saying like Superchain in some way is as big of a deal as like the decision that many of the founders, like layer 1 protocol founders, made. Do you want to be EVM compatible or non-EVM compatible, right? So it has, if it works out, it's actually significantly impactful, right, for the next 5+ years, right? And then Superchain also, the idea of a Superchain also enabled this discussion of layer 3, because one of the most insightful things to talk about layer 3, I want to kind of really highlight is that layer 3 is not layer 2. It seems like it seems like such a dumb like way of saying it. It's like, and the reason why I want to say that is because this, right? And the same analogy I kind of gave is like shard 1 to be part of the Superchain is not going to be shard 0 be part of the layer 1. It has to be, you have to bring some new interesting features. Otherwise, you're replicating the same thing and expecting the same result or better results, right? And when I say like layer 3 is not layer 2, it's not just a roll up on top of roll up. And Vitaly actually talked about, right? There's actually, do another roll up on top of another roll up. There's actually diminishing return, right? Like you call it quadratic scaling, right? Just because you stack different roll ups on top of it, because like roll up fundamentally at a computer science level, it's just a fancy way of saying it's a data compression trick. Okay. Right. And you and I will both know, if you have a PDF, like a modern day PDF, right, or a JPEG, let's say it's 10 megs. I put it into like a .raw or .zip, compress the file, right? It actually does, the file size doesn't go down. And another kind of an interesting kind of a, take that kind of into the logic extreme, right? Have you ever tried to zip up another zip file? The file size actually gets bigger. And you probably study this, right? There's actually a lot of overhead for zipping files on top of it. So that's why roll up on top of roll up does not make sense, because you're introducing a lot of a kind of a data complexity, compression complexity. You actually may have a negative result.
So what does it make sense for layer 3?
So layer 3 is fundamentally, so for example, there are things that you can do to basically say, hey, can you use like Snark? Can you use Validium? Can you use DA to yield better results? Okay. So that's a differentiation now, right? Layer 2, you don't typically talk about that. But if you actually do, let's say, Validium, which is another fancy way of saying putting some of the data off chain, right? Because keep in mind, layer 3 has a very different functionality. Layer 3 does not need to secure hundreds of billions of dollars of assets. A lot of the layer 3 functionality is made more about capturing some of the lower security risk actions. For example, on Farcaster, I give you a thumbs up. You want to record that, right? I wrote a really pithy article on mirror.xyz. I want to mint that. The nominal value of those are probably less than $1. So do I need to spend $4? Because that's the gas fee for a layer 1 right now. Even this is actually also accounting for EIP 4844, which is the blob.
Well, I'm glad that you actually research so many data solutions, because like your social application required it. And it seems like you now finally understand the market solutions. Celestia, Eigenlayer, Near, even Polygon had the project to do data availability. What will be the deciding factor for you to like even evaluate all these data availability solutions? Yeah.
So one of the things that we talked about, for example, within the Timeless X wallet, we support Harmony, right? Transaction fee, I always use the Harmony as a transaction demo, right? Sending a token, right? Because it's relatively inexpensive, right? But the reality is this, right? Fraction of a penny for sending a transaction, like I think that's a really kick-ass use case. But I'm talking about like what is a fraction of a fraction, meaning like literally we're measuring things by bips, right? Like 1/100th of a penny. And the analogy I gave is this, right? And I think this is actually part of the, hopefully through discussion, we can influence how SHA-1 could be orchestrated, in the sense that it needs to be even, like it needs to be 1/100th the price of a SHA-0.
So
right?
cost obviously for both data and transaction, but are there are really not just going to be like tons of layer 1 for transaction and event execution, right? But like I would say 10 valid data availability solutions now. Have you looked into like how you are? Because you list out a few, I really haven't really.
So like obviously the most well known is obviously Nick White, because I know in this week's show note you kind of highlight Mr. Modularity. Hi Nick. Hopefully Hawaii is treating you well. Obviously Celestia kind of led the narrative, and EigenLayer actually really took that narrative to the further extreme, right? And even within the Bitcoin ecosystem with Babylon, that is in itself a data availability.
Do they only do staking or also
they do? I mean, if you do staking and restaking on top of it, there is some component of data availability.
Okay.
Right. So obviously right now, like, it is kind of partitioned. Are you with EigenLayer or are you with Celestia? Celestia is actually on top of Cosmos, right? So now it's basically, hey, you're further fragmenting the very different networks, ecosystem, right? That's the whole idea of Superchain is basically, well, you can be self-sovereign network, right? But we should there's a kind of a unified theme, right? Serving the user. So now, like, there are third-party service providers, such like AnyTrust. It's actually a really good kind of a what they call AGDA, aggregation of data availability.
Are they abstracting anything at all?
I mean, right now, if you dig down to the technical side, it is really just a set of nodes and APIs, right, to run on top of multiple DAs, and then basically you can bounce around to basically find the cheapest either price or kind of integration, right? But part of this narrative is this, right? I think any interesting primitives, by definition, in early days, especially new ones, whether being Open or Panoptic or Pendle, right? These are new primitives that it needs to exist in the context like users or networks, right? And going back to this kind of idea of a superchain and DA and aggregation is that I think this narrative, I think we have a pretty good set of concept now, meaning like you can be a discrete unit, decentralized, self-sovereign, whatever way you want to describe it. But I think the narrative for the next 5 years that you do need to be a part of a larger goal. And I think that's why Vitalik's so amazing, right? He got everyone to buy into the Ethereum narrative, the virtual machine, which you guys participated. I think credit to the OP stack, right? OP stack, in my opinion, successfully realized that the initial goal, what Gavin Wood set out to do with Polkadot. People right? People don't talk about Polkadot as much as they used to, even though Gavin Wood's probably one of the smartest engineers out there, right?
Well, he's not doing development, or the project is not doing development the same way.
Yeah.
So it's off tangent a little bit, but you're also researching on this. Is ZK wouldn't be able to dominate it now that you're also part of the Tycoon and so many, even ZK chain coming up? Why Optimism? Is it still the cultural part? Is it still the Coinbase both invests and using it? Is it a technological debate whether it's going to be fraud proofs versus ZK proofs? Like by the time we look at Validium, it was started by Starware, right? So it was a ZK narrative to start with. Is the ZK versus fraud, Optimism versus Starware a division? So
I think something like ZK, relatively mathematically complex. I think that's probably more suited for people with a PhD, which you do. The reason why we picked OP relative to, let's say, Arbitrum, because Arbitrum has an orbit, right? Arbitrum orbit, which allows for side chains, right? We could have easily gone to Cosmo. The reason why we picked OP is because Coinbase. It's a non-technical decision in the sense that
it's a market decision.
It's a market decision, right? Because what the reality is this, right? Especially for people in the developed countries, right? And this is something that we can probably talk offline a little bit, which is the decision we made to be part of the OP stack and modify on top of Base is because the fiat on-ramp and off-ramp from Coinbase.
I just said that, right? SHA-1 need to have the same Coinbase onboarding.
It's literally seamless, right? For example, now, like, let's say, I talked to my mom, right? I asked her to open up a legitimate Coinbase account. And now let's say you want to on-ramp to any other tokens, right? there's nothing as magical as basically just double tap, right? And using your credit card or your bank account to be able to get tokens on a centralized exchange. And then Coinbase will do all the kind of the magic of routing the different tokens from their centralized exchange to any one of the decentralized networks or self-custodial wallets. And by and large, by the way, this is not just a narrative about Coinbase. I think Binance, by and large, the success of Binance outside of the US is because of that. They have a really well designed and developed centralized exchange that allows for a seamless on-ramp and off-ramp of fiat. And then the very different protocols or applications that are part of the Binance Launchpad gets tapped into that kind of a magical kind of a seamless user experience. So, and I think this is I would say this is probably 70% of the reason why we picked OP stack and work with Base is because of that, right? In terms of the technical decision about using ZK, I think this is the idea basically for performance and scalability. We talk about like layer 3 is not layer 2 because of this thing called recursive proofs.
Okay.
So recursive proof is basically, hey, you can, because the way Snark is actually done, you can actually do a proof within a proof within a proof, right? That actually does give you infinite compute capacity. And that's one of the reasons why Vitalik is he's probably the biggest cheerleader for Snark, ZK Snarks, because you can literally get a 1000x performance improvement. So that's on the compute side. So that's why I say, hey, ZK Snark is actually definitely a real thing. And then there's a newer concept, and this is probably something that we can do more research on. But there's an idea called Verkle. We all heard of Merkle tree. Verkle, right? Verkle tree is actually even is a vector commit. My high level understanding is this, right? In order for is a data. By the way, recursive proof is more of a compute side. Verkle tree is actually more of a data compression technique, which basically you can vectorize the header of like any kind of a data set, and then as long as the hash header is actually accurate, you can just compute on top of that. So now you can actually take, let's say, a large data set, let's say something of like 10 terabytes. You can do multiple verticals on top of it and kind of in a non-linear fashion, you can actually compress the data. So combination of those two is what gives you this kind of one of the key selling point of layer 3, ultra low cost.
I understand that.
Right? So now I think this is why it's no longer it's not just a marketing term, right? Oh, it's like it's going to be cheaper. Like how cheap are we talking about? We're talking about like cheaper. Like for example, if it's not like multiple orders of magnitude cheaper than Harmony, I would not have done layer 3 because Harmony at layer 1 is sufficiently cheap, right? But it's so not good enough. And I'll explain this way. And then the analogy I gave in my presentation is this, right? Layer 1 is almost like buying a very expensive bottle of carbonated water. Let's say Perrier or San Pellegrino. It's like in the US is roughly around $5 per bottle for a small bottle, right? I think unless you're a rich billionaire, you're not drinking that as your daily source of water. You certainly are not going to take a bath with Pellegrino or San Pellegrino, right? So that's layer 1. It's roughly around $5. And right now, post on 4844 blog, proto dank sharding, it's that, right? You still need to think about it, right? You're not just haphazardly saying, I'm going to do a settlement on Ethereum layer 1. It's still about $4, by the way, 40 Gwei, right? If you go to layer 2 right now, right, whether being Polygon or Base, it's still about like 4 to 5 cents. I still need to think about it. Right. So that's more like just a cheap bottle of water. You get it from any supermarket, grocery store. You certainly would not want to take a bath in a bottle of water. Right. Layer 3, ultra low cost. The analogy is more like tap water. I don't need to think about it anymore. Water everywhere. Power everywhere. It's instantaneous, right? And that's cost no longer just is it cheaper. It's cost as a behavior modifier. It completely changed the way you think about it. And let me explain that in the real world implication. Because it's so cheap, a DeFi primitive, a dApp, or a decentralized social network can pay for it on behalf of their users.
The whole sponsor,
right? And that's actually one of the lead segue for Vitalik. In 2022, he was skeptical about layer 3. He's like, hey, we can just use 4337, ERC 4337, which is account abstraction. So, gas sponsorship. We've done multiple gas sponsorship campaigns early this year, right?
$600,000.
Literally, it's like, I think Pendle, which is one of the leading sponsor for paying for gas, I think it's like $400,000. All the different dApps, all the different DeFi services has to pay. That's $400,000 a lot of money, right? So when we're talking about layer 3, if it's like 400,000 to let's say $40, the Harmony version of let's say Panoptic, you know what, I'm just gonna pay for it. It doesn't matter if I have like hundreds of thousands of users.
DeFi traders and other,
right? So that's kind of the way I mean, trying to bring it back to the full circle, right? Like Superchain is a narrative for layer 2, right? But that also begets this kind of a new kind of a experimental idea of layer 3 that's even much cheaper, to the point it changes user behavior.
I like that.
Right.
So let me jump back to DeFi so that we'll start taking the like questions from the community.
Yep.
When we jump back to DeFi, obviously, it's also something that you guys are very good at. So I want to ask about the question of like the points campaigns that you have been seeing. Not only that you guys participate in many of the point campaigns, but it's also part of the product development to make it make sense. And this week I was able to draw the connection between the point system back to now how people are actually doing the swap of the points that become a entire, they call even the blue chip of DeFi now, Pendle, being the blue chip, or be able to separate out points and the principal tokens. So how do you think about like what should be the points for layer 3? What will be the primitives? Not only that we understand from the like almost philosophical perspective, it should be soul bound, it should be like tied to a wallet, tied to an address. But how do you see now so many tokens have launched and many have still be unlocked with the fully diluted value? So that I think DeFi is just a general term that with the points for the engagement, that will be, there's the costs and there's the value. Right? Like how do you see the value part being captured by the points?
So I'll kind of start from 30,000 feet, right? And we talked about in episode number 2, everything that can be digitized in the past 30 years has been digitized. And the larger crypto narrative, if you've been paying attention, is that everything that has been digitized will be tokenized, right? And a lot of the kind of the on-chain actions, it does, if you want to do it in a legitimate way, it does take about anywhere between at least 3 to 6 months to develop a very robust, well-designed tokenomics, right? That's like in the crypto world, 6 months is like equivalent like 5 years in Web 2. So very few startups, very few founders have that luxury. So points is a short circuit, right? It's basically, hey, before I can design a really robust community and tokenomics, let's use points. So I think points is really valid, right? It's really kind of a fast tracking to tokenization, right? Now, again, I have a very kind of a neutral stance on this, in the sense that people should be able to farm points, right? This is actually a really good way for everyone to kind of discover each other, right? And really kind of do the learn to earn model.
Okay.
Right. So I know, we'll probably talk about this in some future dates, but we'll talk about some, learn to earn model that, pretending we can work together. But here's the kind of double-edged sword now, right? Farming points is not neither a bad nor a good thing, right? But it does defeat kind of the main sole purpose, right? You do want people who are here, the community, here to build with you, at least for medium to long term, right? So whether being soul bound or ability for you to affix a certain attribution to the community, I think that is important. That's why you have like reputation protocols, Karma 3, right? You have like Orange protocol. You have Tentacles. There's probably about like there are probably about like 30 plus protocols. They're trying to basically do some kind of approximation of the value of this particular wallet address, right? Because fundamentally, you do want to have a larger distribution, right? It's diversity, right? So bring back this conversation. I'll punt it back to you in this analogy, right? The credit card companies and the airlines for the past 40 plus years invented this idea of points, right? And there's a lot of market value, customer loyalty. For example, you and I would both fly United. To be honest, it's probably one of the worst airlines, but I'm stuck because I've been using United for probably about 20 plus years now. I'm stuck there, right? Because I have points, right? I have status, right? Point is an approximation of status, right? And then United about 10, 20 years ago introduced the idea you actually transfer point within your family, or you can give it to someone else. and then I think the past 5+ years that you actually can sell it.
Yeah.
Right. So that's one. Price discovery for points is important. So selling futures, I think that is truly a value unlock.
Okay.
Right. Now, what's I think even more interesting is actually this, right? Point, I think every crypto project, whether even Harmony, let's say you already have a coin and token released, you should still do points in this way, right? For example, Starbucks have Starbucks credit cards. So that's like typical point system that pretty well understood in the context of Visa and MasterCard. But Starbucks in the past 10 years, they also start introducing this idea of points because that's a more kind of immediate way to gauge customer engagement, customer retention.
Well, that's where, and we are really time to take some questions from the community now, so that we can maybe end on a philosophical or open-ended like discussion. Right?
Yeah.
That at the beginning, I was debating with you, like what will be the difference between humans and the AI and the bots, and a wallet address created by people, created by machine versus about like there's a human behind it, and the same thing with whales versus a small like a wallet holder. I actually think these are all just going to be tokenized and on-chain like DeFi away. So I do agree with what is happening within the community, within even application. The social part is going to stick. But what is really sticking is the friction. Right. You actually need to buy another CPU just to farm or to mine back in time Bitcoin. Same thing, you have to go through the work of creating another wallet, meeting someone in person, going to proof of what is it, personhood, and the proof of a poet to really show up. But I'm not understanding the value or the distinction of all of this. Right. We know for a fact airlines and retail shop artificially create those walls. Right. Those walls do create community if it's physical, if there are human interaction. But on blockchain, everything is finance, everything is a status that whether it's fake or real, whether it's generated or like generative with the AI, I haven't seen a more really a fundamental philosophy or model.
Yeah, and I'll kind of answer in a way that's actually hopefully more comical, but hopefully also also gets kind of the point across, right? I mean, whether it being token price appreciation or points, effectively you're basically saying, hey, there is certain margin, right? Like whether the Harmony One price goes up and down, effectively saying there is a bit of
it's a value capture,
right? Value capture, right? And value sharing, right? And the fact that credit card company gave you generous points means there's profit margin, they can actually dish it out, right? Is that a good thing or a bad thing? No, I think by and large, if you believe in free market, if you believe in capitalism, that's a good thing. Certainly, you want basically all of us are profit seeking, right? Profit seeking is not a bad thing. So profit sharing is also a good thing, right? As long as you have a stake in it. And then the more kind of generous way to think about it, if you think like points and reward system in general, it's basically the fat, right? Well, is fat good? Like most people say, hey, you don't want to be too fat, or fat is actually not good for your health, right? But if you try to cook food without fat, if you like butter, if you like bacon, if you like steak, that's fat, right? So it's actually a good thing, right? So I think too much of it is certainly not a good thing, right? That means, hey, you're basically oversaturated, right? You're probably not, you could be run more efficiently, right? And certainly, like everyone dishing out points randomly, right? I think that is a problem. And I think if you look at the overall crypto sentiment, I think there is a bit of a sour taste now with points for several reasons. Number one, because we like to experiment, move fast, and break things. A lot of point systems, if you really sit down and you just open up a spreadsheet, it actually makes no sense, right? Just literally, it's like you didn't even do back of envelope math. You just want. So I think, and that has a negative impact on the community. It's like, well, you issue so many points, right?
Another season,
right? So that actually is, I think founders and I think most projects, good projects are not guilty of it, but a lot of bad projects are guilty of it, right?
I think they're all guilty, and we are all guilty of both giving out and farming. Right. But that's why I want to ask a more philosophical question. Right? What is the principle of the points? I think, of course, Vitaly wrote the right paper about Soulbound and the community. The Soulbound society actually talk about the social part a lot about, right? But we do want to start taking questions. So check what Theo has collected from the community, so that I'll expand on your points there, right? I think that's the irony of it, that we invented the ledger to do all this tracking of currency, but we couldn't even talk about points on chain in public, but a spreadsheet. Right?
Yeah.
So hopefully next time we'll actually expand on that. You have some questions to start, and I'll hope to bring back the topic today, but also the timeless angle in it.
Yep. Well, shout out to Theo for curating. Literally, we got. I mean, if you look at the YouTube live and in the Twitter space, we're getting like a lot of engagement, and we're gonna continue to do more of this. So I'll just kind of filter out some of the questions, because we literally got too many questions and we can't answer in the interest of time, right? Number one is basically, I think I'll just cherry pick some of them.
Sure.
Right? And I'll combine a couple of the questions into one kind of like. I think in large, I think you have always been a voice of the community. Do all the goods and the bads, right? But certainly, I think you're still here, right? And I think there's nothing more important to be man in the arena, right? So, and again, this is kind of me gently pushing back on a community sentiment a little bit, in the sense that you're not MIA, missing in action, right? You didn't just basically, hey, I'm gonna leave the arena. You're still in the arena fighting this battle, right? So I think one of the questions is really more about this, right? Can you just kind of look at like on a weekly basis? And I know you like to measure things on a quarterly basis, right? And obviously, I'm more interested in on a long-term perspective. Just kind of, how do you actually make decisions? How do you prioritize workflow, right? On a weekly, monthly, and quarterly basis.
That's really good. So I think let me answer specifically about for Harmony project, but also what the team is thinking about progress. I do think when we started, we really see as a generational change for all of us, the founding team and being the crypto so early, to see what will be the impact for the next decade, century, that this technology come. And next week I'll talk about that actually, the whole fiat and the macro market. But day to day, I am like going at the full speed where the market is, right? And for us to learn AI last year, and for us to really build many of the social applications with you, was a great blessing last year, that we finally is ready for DeFi to talk about a lot more specific, right? So a few years ago, we are a lot more thinking about how to manage the grants and the hackathons and the treasury meaningfully. But this week, this month, we are all about, can we get sustainable fees of a product that we will be a very meaningful leader to be so deep, and the whole team like diving into. I know it's not an easy thing for both the team to build. Like it take a lot more coordination, a lot more research to be done, rather than just like, hey, here's the money. Why don't everyone just go experiment? Same thing. Like that's what the development is for the community to understand. Like what will be the next roadmap. What we're launching, which partner we're working on now, what are the progress of the team that will paint the picture for Q3, if not the rest of the year. I think that's our decision process every day now. We will write the progress on the GitHub. I will publicly talk about the research and the product and the development that we're doing, both on my blog and the podcast here. I think that's the, I wouldn't say decision like results, but the decision process itself.
Yeah, I think the process is always is what the very few things you have control over, right? The end result, I mean, there's a lot of, when we talk about random walk, right? A lot of things are just basically out of your control, right? But I think to summarize what you just said, I think DeFi will continue to be one of the center of gravity for Harmony, right? Both in terms of like on the technical improvement, right? On the recovery, right? And also that I think, if what you say is one thing, but what you do is actually another, in the sense that it's actually congruent in a sense for the past, this is episode number 4 now. I think, you've been kind of one of the very few instances where I think I do witness, and I am hearing the sustained energy in terms of like DeFi, the commitment to DeFi.
Yeah.
Right.
And that's why I want to put it as social finance, right? Like even though we're so doubtful, we're asking questions and points may not work. Both you and I really, really believe in this narrative, right? That at the end of the day, we are humans and community building something. And the finance will be the native and the most product market fit of blockchain. But the social finance is yet to be like captured, defined by us.
Right. So, and I think the second kind of a question to summarize, I think there are 3 questions actually related to this, right? Which is like SHA-1, right? SHA-1 has been talked about even as early as like 2022, there was actually quite talked about when RJ was still helming the kind of the day-to-day development, right? And I think today we already kind of answered it. And I think it looks like is it relatively accurate to say like you haven't made a decision yet in terms of the final kind of like utilization or the direction of how you want to push SHA-1. I think the question is really more about like how would you describe SHA-1 in maybe one or two sentences, right?
So the story of SHA-1 should be about uniform scaling, right? We answer that from the first version of the white paper to the entire team building it and launching it 3.5 years ago. So there's no doubt SHA-1 is very meaningful for us. But you are right. The question shouldn't be whether we were right about the narrative, whether we are the first one to launch, or whether the market needs scalability today. As a matter of fact, probably both scalability, TPS, and the cost and the fees may not matter to as much as where the market is, maybe regulation, maybe the whole geopolitical about where all these interest rate is, right? So we need to be very cognizant about that, what we can build today and what we have built so far, to where the market is. Can we be part of the Superchain? Can be the new cryptographic primitives that we can launch in first? So SHA-1 has to be about utilization, right? Whether the perpetual and the DeFi application that dominate the usage of it. If it's not about like let's have 1,000 projects just experiment, then we need to be very correct about what can generate fees, what will be the utility of the SHA-1.
And to kind of, again, fortifying the answer a little bit, and again, for community who are listening, right? I think the discussion of SHA-1 has always been a good idea. And I think certainly how you use it, how you apply it, has always been dictated by the kind of market direction. For example, back in 2022 and 2023, it was basically, okay, can SHA-1 be used for gaming?
Exactly.
GameFi,
DeFi Kingdom,
right?
DFK specific for SHA-1 was very meaningful. We think about that for AI data and for even games and even social data like Timeless. These are all like correct, right? Many people are doing that. Many of the app that really gain traction, if not even fairly on in a few weeks, will move to its app chain and what's not. These are all correct. But the answer is, what about today, right? What are we building this week that will be meaningful, launchable in the Q3 quarter?
So I think for now, like I think we'll just pencil it in, right? Given you talk about like, in a short, medium term, you're saying like Harmony as a whole, as an ecosystem, is DeFi focused because the fee generating potential, right? In SHA-1, there's a relatively high probable estimate that DeFi will be a part of the SHA-1
Absolutely.
narrative, right?
I would say even more narrow and focused on that, right? When I say derivatives, I explained a few weeks already. Instead of thinking just about DeFi, think about like any social apps. The more focused, more narrow, more deep, more convicted you are of your conviction, is the whole idea that we're already picking out, right? Panoptic, GMX V1, we already launched to be testing. And the last one is open, OPYN market of the Power Perpetual. These are the leading candidates. We'll be writing blog posts, we're announcing partner doing that. We'll be doing actually the whole campaigns and point system of like really helping the traders. But we are pretty like confident that the SHA-1 need to be even faster finality. If you see some of the progress in Q2, is actually improving the finality, but also being part of the Superchain, right? It's a very early conversation, but that's the great part about it. Everyone's still figuring out how to be part of the Superchain.
So I think to answer the question for people or community who are listening, I think the confirmation is fairly positive in the sense that I think there is a kind of a larger thesis for Harmony, at least for the second half of 2024 and going to 2025, right? The application of SHA-1, I think you've been pretty openly discuss this, right? So this is an open invite for people to write in to say, hey, what are a better way to actually constructively get this idea up and running, right? Which ties up to the third, and I'll take one more questions and then we'll end it here. Obviously, there's evergreen kind of like the monkey on your back, right? Not just on you personally, but as a larger kind of an ecosystem, which is the recovery, right? It is the albatross on everyone's back, right? Within the Harmony ecosystem, and I think I know the elephant in the room. The short answer there's always, well, can I get paid back,
Mhm.
right? But I think paying back is just an end result. And we talk about like, what can Harmony as an ecosystem do to give a relatively high probable outcome that, hey, payback is a work in progress,
Mhm.
right? So I think the larger question, I think there are 3 or 4 questions related to recovery,
Yep.
grants,
Okay.
right? External funding,
Mhm.
right? Generally speaking, can you just kind of directionally speaking, how to
Absolutely.
think about that? Yeah.
So in terms of our resources, but
Mhm.
also our obligations, I think we are even more convinced that it's really about the sustainability of the network.
Mhm.
The recovery process has been great, driven by a few committees and very technical folks to think about like what can we even like over time pay back, help them recover some of the fund. Those will be ongoing, and we are past even quarter way of payback more than 25 millions of the 100. And it will be a hard lessons for us and a hard like resources to be dedicated to. But exactly 1 year ago, we did that.
Yeah.
Right, we are able to fork so that our minting, so much half of it will go to the recovery process, and it has been going great.
Yeah.
Like we know that not every of the bridge user affected will understand what we're doing and know what's going on, and just really even see that as a big security problem that we always have to face. But at the end of the day, what will happen in 5-10 years is looking back, what are the decisions that we have made with respect to the bridge incident that we had to deal with. That's the first thing about the recovery.
Yeah.
The next campaigns about grants and hackathon, that's much harder.
Yeah.
I think the diversity of what we started with was great.
Yeah.
We always talk about open source, open development. Now come back to really much more competitive.
Yeah.
Right. Everyone is giving out $1 billion
Yeah.
resources, retroactively giving out like tens of millions of even grants to people would not be the approach that we take.
Yeah.
We think that it's much more important that the product itself will be sustainable, generating fees, and being the right product experience, rather than having another like 10, even 20 games and 20 like bots and 20 like campaigns that we do.
Yeah.
So I need to help the team and the community to understand that there will be a product that will be heavily promoted, that will be generating positive traction for our ecosystem.
Yeah.
And then the last part about how the community can help, right? And that's much harder when they are still really still hang on to how our past. I think our validator have done very well to be sticking around with us. And the great thing is the system, both the tokens and the technical part, they will still be around. Whether 1 person, 100 people, or 1,000 people. But what will be starting from today, not looking back 5 years what we've done, 5 years from now, whether they will today be part of it, we may really, really need to give them points and reputation and being able to really participate in the campaigns, rather than thinking about, oh, it has to be about 1,000 validator to be meaningful. It has to be about like what we are like having the DAO ecosystem for them to be meaningfully participate. I think the community really deserve us having better traction overall.
Yeah, I think that's a really good set of answers, in the sense that, I mean, and I think, again, for people who are listening, like sometimes, these questions are hard questions, especially when your pockets are actually on the line, right? And this is my way of saying, moderating the answers a little bit, in the sense that, yes, it may not be the immediate answer you want to hear, because legitimately, I know where some people are coming from. It's like, just here's my address. Is it next day or next week, right? But in reality, I think, it is a kind of a larger set of variables you have to take into consideration, right? What about the hundreds of thousands of validator participant and retail investor who actually participate in the overall ecosystem, right? Those things need to be taken into consideration, right? And I think the universal constant is that just you're still here, right? The core team's still working on it, right? And there are interesting ideas, right? It could have been easily just like, well, let's use the same narrative from 2 years ago, 3 years ago, right? I think the discussion about Superchain, I think you're the one that forwarded the DeFi digital Superchain, right? And that was a really well written article, right? And I think at the time, about a month ago, it wasn't just like, oh, it's a side conversation, right? I think clearly you have been thinking deeper and deeper into this, right? And going more concretely, how to actually utilize some of the resources that you have at your disposal.
Exactly.
Right.
I think not only that's it's about how much obligation or resources we have. Is the market still wild? Right, we are still so early. I'm very glad that we started 6 years ago, but really, like the opportunity, the next few months, never mind the next few years,
Right.
it's going to be amazing for us to be like thinking so positively, but also so much of the building that we can do.
Right, and I think the event. I mean the body of work is critically important, right? Meaning like in your batch, the vintage of 2018, you can probably count the number of layer 1 protocols still around
and still building,
and still building,
founders
right?
driving, still have the community that really believe. I think people underestimate what like the 10x mean in the future.
Yeah,
right?
And I'll end with this, right? NVIDIA's been around for 37 years.
It's crazy, right?
It's crazy, right? And then I still have friends who work at NVIDIA. Back in 20, good for them, right? But they obviously were also thinking about quitting at the height of when companies like Facebook and Google was taking off, and NVIDIA stock was actually for about 20 months or so was actually underwater.
Oh, for sure,
right? So meaning like you pay $1 for NVIDIA stock as an employee.
Google was at 1.2
right?
for my stocks.
Yeah. So the point being is like I think these things, like if you have the affordance, right, and the grit to play the long game, I think the market tend to favor, right?
It's crazy,
Yeah.
like founder-driven, like project. There are so few of them,
Yeah.
right? Chain, so few of them. Whether they have made it or they're dead already, right?
Yeah.
Still playing the game, still in the arena. PhD founder-driven, right? Let's count them. Not because I have one, but because like if you are interested in building, if you see broader sense of the world that. Like NVIDIA, Elon being super technical and still driving it. These are the few technical founders that are really believe not only the like capturing what the market has to offer, but they really have some innovation to offer.
Yeah. So with that, good. Episode 4 is in the can, and hopefully again 10% improvement week over week. And one day we'll crack the golden nugget, right? To be one of the best kind of founder to founder conversation.
Thank you.
Right. So
again,
all right.
Thanks everyone.
Thanks everyone. Take care.
Today.